What's going on, guys? It's GBP baby. Welcome back to another IPDA data range video. I hope everybody's doing well. I hope you're all enjoying your weekend. And yeah, we're finally entering the month of July. Summer's finally here. England's about to win the Euros. I'm joking. I don't know. But nonetheless, yeah, let's get straight into things. So how do we do the IPDA data range? If you don't know what the IPDA data range is, it's basically how ICT taught price to navigate. No, that sounds weird. ICT taught that price uses the IPDA data range in order for it to navigate and get to certain highs and lows, and for us to identify liquidity. And in order to identify it, what you do is you start on the first day of the previous month. So I'm going to be looking at June, and then you cast back a 60-day period. You also need to delineate the 20-day period and the 40-day period. That's why I have lines here, here, and here. And then you want to start casting forwards 20, 40 and 60 days. And basically what ICT teaches is that every 20 days there is some kind of either like continuation, or you'll find a significant turn in the market. So every 60 days there's some kind of turn or continuation. I forgot the specifics about it, but nonetheless I've been doing this for a while. However, it's been a while since I have applied it, and it will help us identify where potential liquidity is and help us go into the next month with a little bit more confidence. So yeah, the first thing we need to do is we need to mark out the highs and the lows of the last 60 days. So when I say the last 60 days, I am starting from the 3rd of June, just because he taught to start from that period. So the last high was here. This is the highest high of it, and we'll make that like so. And then we also want to look at the lowest low. So it's going to be right down here. I will make the highs blue. And then what we also want to do is we want to mark out the highs and lows of each period as well. So each 20-day period, let's get those highs and lows marked out. So we have this high from this 20-day period. We can drag that through. We have this high, but this is obviously the highest high. Let's make the highest high a little bit more identifiable. So we'll make that thicker, and we'll make the lowest low a little bit more identifiable. And then we want to get this high as well from this 20-day period and drag that through. Now I might not have them actually, yeah, it might get quite messy quite quickly, but we'll see. Then we also want to do the same with the lows. So obviously this is the lowest low of the period, this is the lowest low of this period. So let's get that dragged out. And then we want to look at this low as well. Now it seems very basic as of now. Why can't I? Right. But we are going to get into a lot of detail and start looking at we're going to start splitting the ranges up into midpoints and things, and looking for PD arrays within them to help us navigate as we move into the new month. Just because I don't want it to be too messy, let's just keep the highs in their assumed sections like this. Unless, yeah, actually we'll put it to where it's been traded through. Bear with me, guys. This video, I don't know how long it's going to be. I'm just spending some time in the charts. So make sure you get comfy. Make sure you get your snacks. Get your Haribos. Get a drink. So, yeah. So you can see that the month of June, we traded on higher. Now, if we look at it on a very, in a classic format, we can see we've expanded higher. We came down. Fair value gap right here. And then from then on, we've been trading on and running up towards our relative equal highs up here. So very classic and like very simple in terms of delivery to the upside. We've also ran stops below here, and then that means we also have a breaker, which is the last up close candle. Now the fact that we have a breaker, the breaker is the last high before the low that causes the move up. So we got a low, a high, and a lower low, and then price is traded up. When price returns back to the breaker, it's ICT teaches that price should use it to then to propel higher. So I am very interested in this candle right here, 29th of May, Wednesday, and I'm very interested in the high of it as well. So let's get the high of that marked out, and I'm going to use a ray this time, and this I'm going to write IPDA data range breaker. And what I really should do is I should save this layout, as in I should probably make a new profile, just because I know I'm going to end up clearing my charts. I clear my charts all the time. I clear them all the time. So I know I'm going to do all this, and I'll probably end up deleting it like tomorrow. So maybe I should take a screenshot or something. That's what I'm going to do. Yeah, I'll definitely take a screenshot and then we'll look at this next month, and I'll also drop it in the Discord. So if you're not in the Discord yet, make sure to join that. So we have this level now marked out as our first PD array, and then we're going to start looking around this level as to where price could be trading into, and we will drop to low time frames. But before we do that, let's look at the actual ranges themselves. What I first want to do is I want to look at the midpoints of the ranges and the 25% levels. So from this high to this low, you can see the midpoint right here. You can see our price traded into that and then sprung on higher again, found support at the blue levels, and then eventually ran into the highs. So pretty basic, nothing special there. Let's look at this range now. And you'll see that that midpoint lines up with that IPDA data range breaker. Let's get that gone. Yeah, so pretty nicely. Now 50% level is, again, equilibrium. Price always returns to equilibrium. It does it, like if you study price, it will always return to equilibrium at some point. So the fact that that's lined up with our IPDA data range breaker is quite interesting to see. Nonetheless, let's go down. Let's see what other PD arrays we can see on here. Obviously, we've got the relative equal highs, which is where we're expecting price to draw to. And then we've got the bullish order block right here with the IPDA data range breaker. So I don't see any daily PD arrays available. We've filled this fair value gap right here. This fair value gap isn't filled, however. So there is a slight gap there. There's an imbalance down here. And we may want to pay attention to this if we do start seeing some downwards price action as we move into the month of July. So let's definitely have that considered. We do have a gap here as well. Let's get them marked out. And then in the premium, there's nothing other than our relative equal highs. So if we start finding that price is trading on lower, it should use these gaps in order to help it navigate lower. So let's say we trade lower, we may trade through it, find resistance, and then it'll go to the next part and try and fill it. And remember, we may get down into this breaker, but let's go to the 4 hour. We'll probably be able to see a lot more. And you can see how much of a consolidated end of week we had today. So we failed to take out this high. We had crazy displacement to the downside with the high impact news. And then we're kind of closing on in a very bearish way. So moving into July, why am I? One second, let's get these lines marked out. So moving into July, yeah. What are we expecting with July? Well, if we want to see an up close month, we need to think the same way we do about how I look at my weeks. I want to see the low get created in the first, maybe second week, and then I'd like to see up close candles for the rest of the month. It's as simple as this. Let's draw it out just for diagram's sake. So I want to see us open, create the low of the month, and then trade on higher to create the high and then close like that. That's how I want to see the month form. That is exactly what you can see the month of June did. We opened, we traded lower, we created the high, and then we came back in. Now I'm expecting the same thing to happen in July. Why? Because my target, remember, is to get to above these highs, but 2 above these highs as well. Now these are monthly highs. I'll make them more significant. This is where I want to see price go eventually. It might not do it this month, but what I'm saying is that overall that's my draw on liquidity. So that's where I'm looking for price to eventually get to. So with that in mind, we can start looking at these discount PD arrays as potential places for price to want to trade into. And like I said, there's that fair value gap on the daily here, and then there's that IPDA data range breaker, which is also lined up with the fair value gap right here as well. So I'm just going to have these marked out, and it really just depends on how bearish price is as we enter the month of July. But what I'm saying is that I'll be watching these to see if they provide support or not. For example, once we get down here, if it gives way, then it's likely we're going to go to the next one. If that gives way, then it's likely we're going to go to the breaker, and that's where I'd start thinking about looking for support. If we trade through it, then we may be way more bearish than I expected, and it's not ideal, but it's just interesting to have these available to us. What we can also do is, again, if we look at the range, you can see 25% level lines up with this fair value gap. This fair value gap is in the middle of these two, like that, which is quite interesting. And then we have here as well. And what we might find is that price may use this to like swing off. So we might find that in order to get down there, price is doing something like this. We may see something like that. So that's why I'm going to keep them marked out. But yeah, quite interesting. I'm not going to go any lower than that. I just wanted to show you guys the importance of the IPDA data range and how you can see where liquidity is residing. Sorry. So we know that the liquidity is above. We know liquidity is above there because it's the highest high of the past 60-day periods. And then obviously you've got the lowest low, but we're not expecting price to go there, especially the way it left this low. Once we grabbed those stops, we left it with magnitude, didn't we? So yeah, is that everything I want to talk about over here? I guess so. There genuinely isn't much more to say. Let's see. Yeah. Now, remember guys, this isn't a weekly review. This is like, don't treat this as a weekly review. I'm literally making this just for research purposes. But it'll be interesting to see if we do make it down here in the month of July. Let's go to the 1 hour, see how price traded around these levels. That's an opening right there, a gap, sorry. So yeah, it'll be interesting to see if we can dip into some of these levels and get them filled. I think, and to be honest, one thing as well, the fact that we failed this to take out this high, and I'll show you what I mean. So we've failed to take out that high. As soon as we break this low right here, as soon as that low is gone, I'm happy to be bearish on dollar and expect us to trade through these levels. So I'd happily see us trade through the fair value gap, through here, this fair value gap, and start aiming for that IPDA data range breaker. But until then, and so long as we're above it, I'm not bearish. It's as simple as that. But once this low gets taken, that is enough for me, because that would be a classic mitigation pattern, as in high, low, lower high, and now price is, you know, it's destroying any kind of, it's ignoring any kind of support. So I'd be looking at this, but we need to take out this low first, and that's probably why moving to the next week is going to be very interesting to see how we trade. So yeah, that's the IPDA data range on dollar. Let's take a look at the IPDA data range on pound. Start on the daily here as well. Now, pound, let's go on the monthly. Actually, I haven't seen it. Pound's had an interesting month. But if we're expecting a down close month on pound, where do we want to draw to? Well, we have a beautiful rejection block level right here, and then this low as well. So I'm going to put monthly rejection block. Just so that we know it's there, and then let's go and look at the IPDA data range. So again, I've casted back 20, 40, 60 days, casted forward 20, 40, 60 days. What we're going to do, we're going to mark out the highest at high and the lowest low of that period. So the highest high of this period is right here. We didn't touch that. Very close to it, but we didn't take it out. And then we've got the lowest low as well, which is right here. Let's make that red. And then what we can do, but I didn't do in the last one, is we can split this into quarters as well. So let's just do that. So we've got 25% level right there. Make that blue. And then we want to copy that and make that red. Copy. There we go. And so as we're trading through these levels, it should be using them as support and resistance. For example, here, once we had this placement, we used it as resistance, and it sent price lower, sent price lower, sent price lower. Now, what I was saying on dollar is that we are expecting some kind of there is potential for some kind of retracement, right? So it may trade on lower, which means then that we may see some kind of retracement on pound, meaning that's going to trade higher. Now, where could it trade to? Well, is there a breaker? There will be a breaker. There's always a breaker. So let's find the breaker, and that will be this down close candle right here, which happens to line up with that 25% level. So we can, again, this IPDA data range is giving us levels that are adding to our confluence. So we have a high, a low, a higher high, and then clear displacement, right? So this low is going to be our IPDA data range breaker low. excuse me. And then in terms of discounts and stuff, we have that monthly rejection block level, which was below here. And there's a huge consolidation here that I would think would be able to provide support. But honestly, if we're expecting dollar to be running out highs, then with GBP, in terms of lows, it'd be this low I'd be watching. And that's because it's a data range low. It's 40 days ago, so 20, 40. It's a 40-day period low, so this is a significant low, meaning that we may find that we have significant bearishness on GBP, because if it's going to target any kinds of lows, it's going to be this low. Maybe not this low, I'm not too concerned about that one, but this one I've got my eyes on. And remember, we have elections next week. So, you know, very interesting to say the least. Let's get this marked out as a low for sell side liquidity, and this is IPTA sell side liquidity. This is very significant liquidity. Like, don't get me wrong, highs and lows are significant. This is liquidity above there, liquidity above there. Liquidity is everywhere. But my point is, because it's below a 20-day period low, it's extra juicy. It's got extra sauce on it, you know? It's got extra toppings. Anyway, there's that breaker low. So if we're going to see a retracement, I'll be watching this level as a potential point for us to retrace into. Let's go to the 4 hour. Now, as you can see on the daily, there's no like clear reversal. So that's why we'd have to drop to the 4 hour, find the reversal. And what I'm talking about is the reversal that's going to allow us to create that premium. So the 4 hour will allow us to see that, just because, you know, you can see more, right? Again, we had a very ugly close, not ideal. But if we see continued support, you see how we're trading on higher? Like, if we fail, like the fact that we're failing to take out lows here and stuff, we may find quite an easy run up in towards that IPDA data range low. And there's these highs above here for buy side liquidity. So this might be a very nice month, guys. This is the first time I've done IPDA data ranges in a very long time, and obviously I've learned a lot over that period. So maybe that's why I'm starting to see how useful this may be, assuming, you know, we're on the right side. Let's look at dollar real quick. Interesting. And the reason I want to look at dollar is because I'm looking at this same consolidation, right? So if we look at this high, and you'll see we missed that high there. What did euro do? Same. So like, all things are indicating to strength at this point because we failed to take out this low. But nonetheless, this is the 4 hour. So let's see what kind of PDA raise we can find on the 4 hour that price may want to use, or what may help price get up to here. Well, we have this bullish order block right here. And don't get me wrong, guys, I will be covering all this in my daily review on Sunday, my weekly review. I'll be covering all of this, but it will be much more brief because obviously I'm not going to be spending 30 minutes doing that. Nonetheless, got support there. So it'll be interesting moving into the new week, July, to see, okay, does this continue to hold support? And if it does, then there's no reason to expect that we're not going to try and reach for that IPDA data range breaker low. Whilst we see dollar try to create the low of the month, either in this fair value gap remember, or there was this one, or there was even this one. So it really depends on how weak we see dollar is. But yeah, I find it interesting how we traded on higher there and price was just like no. Let me see on the 1 hour. Did we get like, because this is if this is a reversal, look at that. This is not nice. But what I'm saying is, if this is a reversal, they've done it in a very ugly manner, but understandably as well, because wow, at the end of the day, we are expecting them to come lower at the end of the month. Like, what I'm saying is that if we've got a bearish month, they're going to do this. They're gonna send us higher to create the high of the month and then start running lower for the rest of the month, right? So them creating an ugly reversal like this at the beginning isn't surprising to me. If it isn't surprising to me, because they're gonna eventually come down below here anyway. Furthermore, this is a clear consolidation. What is consolidation? Consolidation is there to build liquidity, right? Above the market and below the market. So there's going to be a lot of stops residing below here if they send price higher. Like, especially when they keep showing support like this, support in quotation marks. So yeah, very interesting. I'm only just seeing this now like this with the IPDA data range taken into account, because now hopefully you can understand. Remember, I'm looking days back, many days back. So this is really macro level like analysis, which is going to help frame. Anyway, hourly nonetheless, a lot of consolidation. It'd be nice if we move into July trading on higher. If we start moving higher into July, this is going to be a gorgeous month, and I might be on something here. Anyway, we've got a breaker, low, high, low, low, broke higher. So what I'd be looking for in the new month is to see, okay, does that hold support? Are we finding more support? The same way on dollar. What did we have? That was the level we had. Do we have a breaker on dollar? Bear with me, guys. Nonetheless, let me see. Well, it'll be this. I'm looking at so what I was doing is I'm looking for the last down close candle before the up move, right? In this case, it's here. But I'm being very, very specific here. So I don't want to be too specific, because I don't, let's not think about it too hard. But what I'm saying is that if we are to trade on higher, this should act as a breaker, and we shouldn't see price come back below here again until we've hit our premium. So it'll be interesting to see. But like I said, I'll talk more on that in my Sunday review, because I'll be like, oh, I'm expecting this, I'm expecting that, blah, 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 blah. And again, elections. But yeah. And you got to remember as well, what is IPDA? Why is the IPDA range insignificant? Why am I looking at all these levels? Because every 3 months we expect some kind of turn in the market. So let's go to the daily again. We've had 1, 2, 3, right? And then what happened? Price started breaking lower. So we're in a new 3-month period that we're expecting price before we see another turn. If you look again here, look, 1, 2, 3. Price moves up. Now I'm not saying it happens over and over again. I haven't studied it to that level. I'm not ICT. I'm just saying he says every 3 months this happens, and well, it's kind of visible, isn't it? Nonetheless, very interesting, and I'll be talking on this in my weekly review tomorrow. So make sure to smash subscribe if you haven't already. If you're watching this deep through, if you're this far through and you're not subscribed to me, I don't know what's wrong with you, my friend. Anyway, I'm going to finish up on Euro IPDA data range. We go back to the first day of the previous month. We cast back 20, 40, 60 days. We want to mark out the high and the lowest low. So let's do that. I am so tired. Now with Euro's a little bit more behaving a little bit better than dollar, because if Euro's going to take out lows, if Euro's going to trade lower, it's going to take out lows, whereas we saw pound likely isn't going to do that, like significant lows like that, but dollar is, so going to take out highs. I hope that made sense. Anyway, so we can look at what should we look at? Let's do the same thing we did last time, because that was obviously helpful. Let's split this now into quarters. Now splitting it into quarters seems really simple, and I don't want you guys to be confused. I'm not saying, oh, go short at every single quarter and you'll be fine. It doesn't work like that. Trading and reading the charts are two completely different skills, by the way. In case you never knew, trading and reading the charts are two completely different skills. So although you're seeing me, although I'm quite confident in, reading the charts and whatnot, trading them is a whole different story, and you and I both know that. Nonetheless, where we found support, 25% level, consolidation, very interesting. If we're expecting a down close month, which we are, assuming dollar trades higher, assuming we want to see bullish dollar, then we want to see the high of the month get created within the first week, ideally. Now, it is non-farm payroll next week as well, so there's things go on in. What kind of premium PDA rates could we be trading to? Well, we have a breaker here, high, low, higher, high, this candle right here. Now, this is a quite high premium. Why is this a high premium? Because it's above the 50% level. that doesn't mean price can't get there. It will do it. Like, period. If we're gonna if they're gonna start sending price higher, it will do it. Like, it will go there. It knows. It doesn't care. We need to remember this. And then we have this bearish order block as well. But I'm more so focused on the breaker, just because I like them, just because I'm attracted to them. So anyway, let's go to the 4 hour. Let's see what we can find. Very interesting. So again, it's consolidation, and we see consolidations before what? Expansions. Guys, let me just quickly add GBP, see what happened here. Right, so we're seeing a level of divergence here, aren't we? Look at this. So we're seeing strength on euro. Why? Because it's staying above. Yes, we took out that low there, but it didn't take out the low the way. Look at that. Now let's add dollar for the bants. Now this divergence, you could argue, well, doesn't this mean that price is going to try it higher? Because, well, you could argue that, right, this is where divergence is really confusing, guys, and even I'm figuring it out to this day. Euro is showing strength, GBP is showing weakness. I'm gonna say that in quotation marks, guys. Imagine there's quotation weakness, and then dollar's showing strength. Divergence would argue that, well, if GBP is moving lower in line with if GBP is trading lower in line with dollar trading higher, then doesn't that mean that dollar should continue on higher and GBP continue on lower, and then euro have to snap into place? No, not always. The fact that we're seeing this kind of strength from euro, and the fact that it just about grabbed that stop as well, is still showing strength, I think this is euro winking its eye at us. Because remember, if we're expecting a down close month, we want to see the high get made in the first week or 2 weeks. So this might be euro winking its eye, saying, hey, look, I'm about to go make my high. I don't give a F about what GBP's got going on. She can catch up herself. She got elections. She can do that. And dollar's low-key showing weakness anyway. So yeah, and there's also another thing as well that we can look at, which helps us. Again, we're seeing higher lows, and lower highs. Just about, mind you, just about lower highs, like just about. So here we're seeing the pairs show that kind of strength. So it's little things like this which well, we'll see how effective they are as we move into the new week, but we can use that nonetheless. And anyway, if we want to see the high get made as we move, let me get my data range, guys. This is a very messy video. If you enjoyed this though, definitely join the mailing list, because I am planning on making more content like this, probably a little bit more cleaner and edited. You can tell that I don't edit according to them below, because ain't nobody got time for that. So yeah, let's go. So yeah, if we want to see the high get made in this 20-day period, where do we want to see it get made? Remember, this is the breaker. Very nice. We're seeing that strength for the divergence. There's no reason we can't see us rally above that 50% level into a premium off the 60. Remember, this is the 50% level of the last 60-day period. So this is a real premium. So when we're up there, we want to be looking for shorts. Essentially, that's the idea that ICT teaches. Let's go to the 1 hour. And then we have some beautiful relative equal. Look at that. Look at that. That's a nice fair value gap right there. And don't get me wrong, depending on how overzealous we are, we could even reach up into there. Ideally not. But that's just food for thought for you guys. Let's go to the daily. Is that a fair value up on the daily? Yeah. So yeah, there's that. So I hope you learned something, guys. This is 30-minute video. If you're still around, honestly, thank you so much. Make sure to drop a like, drop a comment, smash subscribe, and yeah, if you want some more of this, do let me know, because I'm happy. I love the time in the charts. But yeah, thanks for watching, and I'll catch you on Sunday. Yeah, peace.